Google is facing some tough times in Germany. A new digital tax of 10% is coming. But why do we think that this will be handled by Google with ease? And why is there still a lot of growth potential in the stock? Find out after the intro. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick and I have my colleague Henrik sitting next to me. He's our portfolio manager. And today we're going to be discussing why Google has a lot of potential left in its rise to new highs and why this tax that has been invoked is not really a big deal. But why is that the case? It's 10%. Giving away 10% seems a lot to me. What do you think, Henrik?
Well, I mean, certainly 10% is something, but if you consider that up until so far, with all the loopholes that Google has been using, they aren't really effectively paying any tax, it shouldn't be too dramatic. And furthermore, the question, so why can they absorb this tax so well? Well, it's pretty simple, it's margins. Because if there's one thing that Google has, it's massive profit margins that allow plenty of wiggle room to stay profitable, even in the face of a tax such as this. And sure, this isn't great news, but in the grand scheme of things, it won't have a major impact, especially if the tax remains exclusive to Germany. And even if a few nations of the European Union follow suit, it won't really be a disaster for Google.
Okay, I get that. So a little bit of tax tricks by these major corporations. They actually do know how to save tax. That won't be the case. But I saw some mumbling around the social media that Google might become a dinosaur like Yahoo was in 2000 due to the rise of AI. You wouldn't use Google for searching anymore since the exact terms that people want to search for can simply be answered with AI with much more ease without having to browse through many search results on Google. So would you agree that Google might be becoming a dinosaur now?
Well, that would be a fair assumption to make, considering that now more and more people are just plugging their questions into an AI model rather than just simply planting it onto the Google web page. But this is actually also very beneficial for Google itself, because they are actually on the forefront of the AI development. And Google is making waves with its latest project, revealed at their big new event. In their recent showcase, they showed some very impressive breakthroughs, all centered around AI. And for me personally, one tool stood out the most, which is VO3, a new video AI tool that's already at a level of realism that you can just call eerie. But there's also one very important key factor when it comes to the future growth of the stock. Actually, since February, a lot of money has been flowing out of the US market, mainly affecting the big Magnificent 7 stocks. But now this trend is reversing and capital is also returning into the market. And guess which companies benefit the most? Exactly, the same companies that were suffering previously are now profiting the most, which are the big tech giants like Google.
So in that sense, you would be quite bullish fundamentally on that stock. Now let's check if that also holds up nicely with the technicals on Google. And if we switch to the chart, I want to highlight this particular level here. That was the high of 2021, which was achieved at $150. And from there, Google fell to a price low of approximately $90 to $86, where it formed its trough. And it took until now that we could actually break out of this level. However, it didn't really sustain itself and we came back to that level again. But here's where the chart magic actually happens, because we found support not only one time, but 2 times already. And generally speaking, a breakout is usually tested 2 or 3 times before the actual move takes shape. So we are currently setting up for a big move in Google since we could sustain the high here. That would also mean that our invalidation for this would be this low, because if we break it, then we would get back into this range and range a little bit more, need a little bit more time, and therefore consolidate much more in a bearish trend. However, I don't think that is going to be the case, because we also did apply some quantitative analysis on this, which we did translate into a wave progression model. This is what you see here. And currently, we have formed a higher low on the short term, and now we did actually get into the buy zone where you can DCA in from 159 to 173. We're currently at the premium zone of our DCA area, but it's still a good price considering how much it could actually rise ahead, because we think that there is a 50% rally coming over the summer, and by latest September, some sort of an uptrend should take place. With the invalidation being very clear here with 141, we have a very nice cup and handle formation with a sideways handle, and usually a sideways handle leads to a significant breakout. So that's even additional confluence and also highlights the importance of the low at 141. So with a stop loss at 141 and a DCA area just above here, it offers a really nice risk to reward ratio to take the trade to the upside. If you like such analyses, we do post these things on the daily in our free Discord as well. So if you like to check us out, just scroll down into the description and click on the link, and you will be redirected to our free group where most of the members also share analysis, and we also share some suggestions like this there. You don't want to miss that. Thanks for watching. Until next time.
Until next time, here at Bloomberg Capital.